Hey guys. Hope you are all having a good investing week. We have made some changes to the portfolio. AMD, which was a trading position to start with, has been closed as it has done a spectacular run. The risk of significant retracement heading into September and October is very high. We have added a new position. This is based on two interesting charts which we want to showcase for our subscribers. We do these videos based on our experience, and we do this in good faith. However, this should not be construed as investment advice. We want to make it clear that these are just our own views on the market, and these views could be completely wrong. The first one is Medronic. We have taken a position on Medronic after they announced second quarter earnings. Metronic is a medical devices manufacturer. They reported their second quarter earnings today. The shares traded up 3% but faded into the close. However, the price has closed up higher on each of the subsequent 2 days. The 52-week range is $68 and $89. The market cap is $112 billion. The PE ratio is 31 and the dividend yield is 3.3%. They operate in 4 major business segments: the cardiovascular, the neuroscience, the medical, surgical, and diabetes segments. Medtronic guided a single-digit growth in most segments for the rest of 2024. The market interprets the news in a bullish manner. If you see the weekly chart, we have formed a head and shoulders pattern on Medtronic. The last swing high has been broken by a tiny touch. This is enough for the algorithms to go active on this stock. If we do a head and shoulders projection, we get a price of $116 for Medtronic. But we will be happy with a 20% move in the Medtronic shares. We collect the dividends in the meantime. To be clear, we are not overly bullish on the stock from a fundamental standpoint. We are highlighting the technical possibility only. New positions can be taken on any pullback with a stop loss around $78. If we compare the Medtronic stock with that of the S&P 500, we can see that Medtronic is still below the S&P 500 chart, suggesting relative weakness, but more recently, the relative strength has been rising. You can see this by the stock price rising even when the broader index was falling. This is an early punt on the stock. If we see the relative strength falling, we will quickly close the position on the model portfolio. The second one we are even more bullish on compared to Medtronic. We have not entered on the stock as we are waiting for a pullback to enter. This is the discipline that we have to enforce on us to win in the market. We wait for the best entry points on the stock. Sometimes this means that we might miss a trade. But entering at higher levels will put us under higher risk. The stock we are talking about is PayPal. This is the weekly chart of PayPal. See the long consolidation. But if we look at it closely, the last swing highs have been broken sequentially. The relative strength compared to the S&P 500 is very high. We are very bullish on this stock. The revenues have been growing and the debt is low. So we will be actively stalking the stock for appropriate entry points. Finally, a quick look at the portfolio. We have exited the AMD position as outlined earlier. Unless we lock in on gains, there is no way to compound our gains. Holding on to a position or not will depend on your fundamental opinion on the stock. Even at the start of the position, we considered the AMD position as a trading position. The hedge is protecting some of the gains. When we looked at the account earlier, the hedge position was about £150 in drawdown. We are currently £100 in profit. That is the whole point of the hedge. We cannot always be right. We will very likely close the hedge if price enters the FVG zone we have outlined earlier. Now a quick look at the Nasdaq. Even though price has sold off today, we are still bullish. The draw on liquidity is still the weekly FVG. The market makers took the price very close to the FVG but not to the FVG. This is what makes us particularly bullish. There is a good chance that when Powell speaks, the initial reaction would be a sell-off to take the lambs in the wrong direction before they are sheared by the market makers. Remember, you can decide whether you want yourselves sheared or not. So we can sit out and watch the price action. Initial move down will be a fake move and price will go violently to the weekly FVG. This is just my expectation and I may be completely wrong. But we hold on to our opinion that the draw on liquidity is the weekly FVG. Okay guys, that's it for today. We hope that we have provided value. We spend a lot of time on the chart to highlight the best ones. So if you think that we have provided value today, please like and share to help the channel.